Hi everyone! Welcome to our channel where we break down complex topics into easy-to-understand lessons. Today we're diving into the world of insurance, a crucial part of financial planning and risk management. Whether you're studying for your insurance license or just curious about how insurance works, this video is for you. We'll cover everything from the basic concepts of insurance to the types of insurance companies, and even how insurance is regulated. So grab a notebook and let's get started. Section 1. The concept of insurance. Let's start with the basics. What is insurance? At its core, insurance is about transferring risk. When you buy insurance, you're essentially transferring the risk of a potential financial loss to an insurance company. In exchange, you pay a small fee called a premium. For example, imagine you own a car. There's always a risk of an accident. If you have car insurance, the insurance company will cover the cost of repairs or damages, so you don't have to pay out of pocket. Insurance also works through risk pooling. Many people pay premiums, and those funds are used to cover the losses of the few who experience accidents or disasters. This way, no single person bears the full financial burden alone. Section 2. Insurance as a solution to economic uncertainties. Now, why do we need insurance? Simply put, it's a solution to economic uncertainties and losses. Insurance helps restore you to the financial position you were in before a loss occurred. This is called the principle of indemnity. For example, if your house burns down, your homeowner's insurance will help you rebuild it, but you won't profit from the loss. You'll just be made whole again. However, there's an exception: life insurance. Life insurance is a valued contract, meaning it pays a predetermined amount, the death benefit, regardless of the actual financial loss. This helps families cope with the loss of a breadwinner. Section 3. Types of insurance companies. Insurance companies can be classified in many ways. Let's break it down. Private versus government insurers. Private insurers are owned by individuals or groups and operate for profit. Examples include companies like State Farm or Allstate. Government insurers provide social insurance programs like Social Security, Medicare, and flood insurance. Self-insurers. Some large companies choose to self-insure, meaning they set aside funds to cover potential losses instead of buying insurance. Stock versus mutual companies. Stock companies are owned by shareholders and issue non-participating policies, no dividends. Mutual companies are owned by policyholders and issue participating policies. Policyholders may receive dividends. Fraternal benefit societies. These are non-profit organizations that provide insurance to members, often based on shared affiliations like religion or ethnicity. Reciprocal insurers. In this unique setup, policyholders insure each other's risks. Reinsurers. These companies insure other insurance companies to help spread risk further. Section 4. How insurance is sold. Now let's talk about how insurance is sold. Most insurance is sold through licensed producers, which include agents, represent one or more insurance companies. Brokers represent the buyer, not the insurer. Solicitors help agents find clients. There are also different agency systems. Career agency system. Agents work for one company. Independent agency system. Agents represent multiple companies. Direct selling. Insurance is sold directly to consumers through ads or online. Section 5. Regulation of the insurance industry. The insurance industry is heavily regulated to protect consumers and ensure fair practices. Here are some key points. State regulation. Each state has its own insurance department to oversee companies and producers. Federal laws, laws like the McCarran-Ferguson Act and the Gramm-Leach-Bliley Act, impact how insurance is regulated. NAIC. The National Association of Insurance Commissioners creates model laws to standardize regulations across states. And that's a wrap. We've covered the concept of insurance, the types of insurance companies, how insurance is sold, and how the industry is regulated. If you're studying for your insurance license, I hope this video helped clarify these topics. Don't forget to like, subscribe, and hit the bell icon for more videos like this. And if you have any questions, drop them in the comments below. Thanks for watching, and I'll see you in the next video.